it's going to be interesting, especially like with the stable coins, because from a just if you think about it, just kind of in simple concepts, right? If a stable coin does what it's supposed to do, there's really not that much that's exciting from a tax perspective.
This episode is brought to you by Trezor. Trezor makes beautifully crafted hardware wallets that allow you to easily and safely store your crypto assets. Trezor's been in the game for a very long time. Since 2013, they were the pioneers of hardware wallets and the seed phrase setup, and their hardware wallets are open source. In fact, my favorite is the Trezor Safe 5. It's a beautifully designed and easy to use hardware wallet, guys, and it's my go-to. And they support a variety of coins. All your top crypto tokens, your Bitcoins, your XRP, Ethereum, Solana, and much more. And even new coins, even BlackRock's BITL token. So they support coins on the institutional side where you have tokenization of different assets and much more. And they even offer a great service that helps you to get your Trezor device set up. You get one-on-one customer support from their team. So you can check that out as well. So once again, I'm a big fan of this hardware wallet. So if you'd like to learn more, visit the link in the description.
Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and today we're recording at Station 3 in New York's Financial District. And joining me is Tom Shea, EY America's Financial Services Crypto Tax Leader. Tom, great to have you.
Thanks so much, Tony. Thanks for having me.
Tom, EY, one of the top accounting firms in the world, and I'm very curious as to what you guys are doing with your clients as it relates to taxes and crypto and much more. But I'd love to kick it off with your background.
Sure. Yeah, we got a lot to talk about. I feel like an hour is just going to fly by. But yeah, let's start off my background. So I've actually spent my entire career with EY. I started off in our financial services practice serving TradFis, working primarily with banks and other capital markets firms. Then around 2017, I relocated out to San Francisco. And quickly got involved with everything going on. That was one of the first big bull runs, and one project led to another. And a couple years later, we kind of formalized our crypto and digital asset practice, and I became the tax leader and been doing that for the last 4 years. And so I serve kind of a wide variety of clients in the digital native space, from centralized exchanges, decentralized platforms, some miners, and even some ultra high net worths, which is going against everything I want. When I first got into tax, I said I am not doing individual tax because otherwise at family reunions I'm just going to get mobbed nonstop. I said I'm not doing it, but obviously we had a number of significant ultra high net worths that got very deep in the space quickly. So that happened. So it's really a wide variety of clients in the kind of the digital native ecosystem. And so now, and I'm sure we're going to be talking about this later, but a lot of the TradFis are, starting to explore and get into the space. So going to be working with a lot of them as well.
I love your Bitcoin shirt. And my next question is, what was your aha moment when you discovered Bitcoin?
Well, it was really work that got me into it initially, right? It was just we got in. I was involved with a project with a significant centralized exchange, and we had to work through kind of a cost basis reconciliation. And so, you just kind of public accounting, you just kind of jump into the project, and it was really during that I really started doing more research into what was going on with this ecosystem, what was the value prop, right? And so it took a while. It took me a while to sell cryptocurrencies to myself, right? Just to kind of go in on it. But it was, I think it was really about a year or so later that I was like, all right, I get it now. But it took time.
I'm always curious about everyone's journey, and everyone has a different path to for this clicking for them, having that eureka moment, if you want to call it that. And are you seeing that for a lot of clients? You mentioned earlier TradFi clients. There seems to be this movement, this herd movement towards blockchain and crypto.
Yeah, and I think a lot of people actually had their aha moment before, right? I think a lot of what we're seeing now is a result of the election results, and you're seeing a regime that's far more pro digital asset industry, right? And so I think a lot of companies and TradFis that are getting into it now probably wanted to get into it a while back, but there was SAB 121, which was a huge boundary for what you had to present on your balance sheet. I feel like lifting that was a big moment, right? And I think it's the first of many big moments, but that was definitely a big moment. And so I would say people probably had an aha moment. I think maybe another aha moment was when, sort of call it crypto spring, right? When we emerged from the crypto winter, right? Because there were a number of events
FTX.
that occurred in 2022, and that obviously, set things back a little bit. But it dropped, it rebounded, and now we're definitely in spring, maybe even summer, whatever you want to call it. But it's so I think that maybe wasn't necessarily the first aha moment, but definitely another like, okay, this thing's been through some events, and it's here to stay.
Right, great points. Like, it showed that it could get through those bear markets and take all the hits, the regulatory pressure, and come out through the fire. And also having the clarity, folks don't have to look over their shoulder like, am I going to get a Wells notice or a lawsuit from Gary Gensler, right?
Yeah, absolutely.
So have we hit the tipping point of institutional adoption? Because we have the Wall Street firms here launching ETFs, tokenizing, BlackRock leading the charge. It seems like there's no looking back now.
I think that's right. I mean, time will tell, right? We will see what comes up. I think, July is going to be a big month with the executive order, right? And kind of that 180-day deadline that President Trump's, implemented for the working group to get back with him for this comprehensive proposal, right? So it's going to be interesting to see what comes out of that. Not just, obviously I'm very tax focused, but, just from a broader regulation perspective. I think we're definitely on the rise. I don't think we've hit I don't think we're even close to the kind of the apex. So, but it's going to be, I think it's going to be a very big year.
And as we see growth, and there's so many things happening, especially around tokenization, like Larry Fink, CEO of BlackRock, said, tokenization is the future of finance. They want to put stocks and bonds and everything on there. That's going to present a lot of tax implications. So tell us about how EY is helping these companies and planning to help others navigate these waters.
Yeah, absolutely. So, and I feel like a big theme around what the concern is with tax is just the ability to report, right? And it sounds straightforward, right? And if you look at traditional securities, right, in a lot of cases, you're getting 1099s. It's kind of easy to figure out what your basis is, what your proceeds, and report gains and losses. Not so easy in the digital asset world, right? And we saw the custodial broker regs go through. We saw the non-custodial broker regs repealed, right? And that was viewed as a win for the industry, and I think in aggregate it is. But now you're going to have taxpayers that are not receiving 1099s from that activity, which puts the onus on them to self-report, right? And so you've got a number of existing solutions that are out there. No one's got it perfect. I'll say that right now, even us, right? But that's where we've been focusing our efforts. I think I told you, right? I mentioned at the beginning, we had a number of ultra high net worth clients that came to us a few years back that said, my kid made X million dollars. I have no idea how to report this, right? And so that was something that where we already had something in motion. We were building a product, and that sort of accelerated things. And so we have actually built a number of proprietary solutions that are geared towards assisting taxpayers with compliance. And it's a solution that can extract transactions directly from the blockchain. It can ingest information that customers receive from centralized exchanges, and it kind of puts it all together and spits out a tax return. And it sounds very straightforward, but there's
piping is probably
the piping is like I said, it's taken a long time, and we've still got a ways to go. I mean, you're still seeing new blockchains and new tokens every single day, right? And how do you capture all of that pricing data, all of that moment in time, because these transactions are happening every couple seconds, right? So it's been a challenging environment to kind of get our arms around, but we think we've made a lot of progress, and that's really at kind of the core focus is assisting with compliance.
I can imagine what it's like on the corporate level, because on the personal level, I just did my taxes April 15th, right? And I sold some crypto last year, had some profits, and there's some on the exchanges. I can't find the history. And my accountant's like, what did you buy this for? And I'm like, I don't know. I'm going to have to put an arbitrary number because I don't remember. But I know it's long term, but it's painstaking. That was the hardest part of my tax returns.
Absolutely.
So these corporations and institutions you're dealing with, are they transacting in stable coins and other crypto assets like Bitcoin and so forth?
Everything. Yeah. And I can talk about this at a certain level because some of it is public knowledge, but not all. We did assist with the FTX bankruptcy, post-bankruptcy, not before. Okay. We'll make sure clear, not before. We came in as part of the efforts and, led by John Ray to kind of sort out the estate. And as part of that, there was a lot of tax reconciliation to go through. And so we dealt with, thousands of different coins, going all the way back to inception. They had the algo trading going. So you're talking about volumes of like hundreds of billions of transactions. And it was, it was unlike anything we had seen up to that point, right? We thought, we had some ultra high net worths that were in millions of trades, and we're like, all right, we really got this. And then this came through and it was like, but luckily we had that stack built already, right? That foundation. And so we just had to find ways to ingest that type of volume, right? And obviously we had to expand for many of the altcoins and different exchanges. But that was really, so to kind of, go back to what your question was, they're trading in everything, right? So like everything you could possibly think of, coins that I had never heard of, right? And had a couple good laughs here and there about, when we did our research on them. But yeah, that was just an unbelievable project. Because we really had to go back to inception and make, heads and tails of all of it. So it was quite a challenge, but ultimately incredibly rewarding. And kind of after that, we're like, all right, well, we're ready. We're ready for the big dogs, right? Because we can handle the volume and complexity that we saw. So yeah. So we're still the kind of the companies that we're working on that are still active. They range from kind of crypto funds to some of the centralized exchanges, decentralized platform. Again, we're kind of covering a whole bunch of different types of ecosystem participants.
You mentioned the stack that you guys have and the software you're using. Is that also client facing where they can access it like a dashboard, or is it just internal? They send you the data, plug into APIs, yada, yada.
Yeah. So we ultimately want to get to that point where it's a little bit more of a customer facing type of model. But for right now, just given where we are, right? It's with all the different blockchains, all the different tokens, we do it as kind of like a managed service where it's kind of within EY walls. Now, we obviously have outputs and dashboards that can help clients understand their activity a little bit better. So that they'll have access to. But in terms of like being an actual customer interface, like some of the other SaaS platforms, we're not doing that yet.
Well, it's crawl, walk, run, right?
Yeah.
Eventually you'll get there. And this is, like you said, all new for everybody. I don't think anyone has perfected it. And on that note, we see the IRS is trying to catch up, and they've been doing certain things, but we recently had the IRS DeFi broker rule repealed.
Yeah.
President Trump signing the first crypto bill, if you want to call it that, into law. How have your interactions been with the IRS within context of all these things?
Yeah. And I mean, overall good, right? And I've kept a pulse through, involved with some trade associations such as the Digital Chamber. We obviously have our own interactions with the service. But obviously given our role as a public accounting firm, we can't really advocate one way or another. We can educate, but not advocate, right? So a lot of the conversations we've been having is more kind of educational and just trying to understand, because a lot of the feedback from the industry was, do you guys really know how many forms you're going to be receiving as a result of these requests, right? And how are you going to intake that? Because that's something that hasn't been kind of opened up or released yet, right? We've seen a draft of the form. Obviously, the regs on the custodial side have been finalized, right? So we're starting to work through that with a number of the major exchanges and how they plan to implement. We've had some dialogue with the IRS, but not as active in terms of what they're doing. But I know they are actively working on it, and they are preparing for that volume because it is going to be significant.
I wonder if the crypto regulation bills, like the crypto market structure and even the stablecoin legislation, will include a section on taxes.
Yeah, it's going to be interesting, especially like with the stable coins, because from if you think about it, just kind of in simple concepts, right? If a stable coin does what it's supposed to do, there's really not that much that's exciting from a tax perspective, right? Because
right.
Taxable event is when you exchange fiat for a stable or a digital asset, right? And if the digital asset is truly pegged to the currency, your taxable gain is going to be relatively small, right? And, you're always going to have people, trading massive volumes and trying to get the arbitrage and stuff like that. And obviously that could be significant, but, the majority of a lot of these transactions are going to be next to nothing, right? And so it is something that, we've been thinking about on our end. I know there's, as part of the reg package, there are kind of simplified rules for stable coins as long as they do what they're supposed to do, right? There's not I forget exactly what the deviation is from the actual currency. So there's kind of simplified rules. I'm curious to see if there's consideration around an exemption altogether, but that's all to be seen.
And then I'm assuming interest earned on stablecoin, like yield, that's simple
taxable. Yeah, it's just taxable, right? It's
interesting. Well, we'll have to see what the crypto market structure, these actual legislation Congress comes up with.
Yeah. And it's going to be interesting to see, there was, throughout the last few years, right, we saw the Senator Lummis of the Responsible Financial Innovation Act. We've seen a couple rules pop up in the Green Book, and these were all proposals that were, very interesting and impactful to the industry, but a lot of it was never really, kind of put through the legislative process. So it's going to be interesting to see if any of those make it, right? I don't know if you want to I can give you a couple of examples right? So just, one we saw was a potential exclusion of gains, de minimis gains on crypto transactions. So that was basically any gain, I think it was $200 or less, would be exempted altogether, which is an interesting one if you think about it, right? Because you go purchase a cup of coffee right now, right? And you purchase it with Bitcoin. You spend whatever 0.000 Bitcoin because it's a $5 coffee or
right. 6 Satoshis or whatever.
Yeah. and that's still technically a taxable transaction because you purchase goods with digital assets that you had a basis in. So passing that kind of rule, and just in my opinion, I mean, that enables a lot of folks to start treating cryptocurrencies more like currencies. Because you're not worried, all right, well, I'll go spend. I'm not worried about my basis. I'm not worried about having to check the box on a 1040. I can just kind of spend my crypto more freely without being concerned about the tax ramifications, the tax reporting ramifications around that. So that, that's one of them. A couple of other proposals that we've, been seeing thrown around is whether you could apply cryptocurrencies to allow for mark-to-market elections, right? For some of those high volume traders that just want to maybe marking for books, but you're or may not be able to mark for tax, allowing that election, treatment around crypto lending transactions, whether you could, because technically right now, if you were to lend me a cryptocurrency and I were to lend it back to you, those two exchanges, the initial transfer and the return back, could be taxable transactions. So I know crypto lending has been a long time on the list. And then there's always the fun topic around rewards and the timing of when those are taxable, right? And so, you remember maybe the Jared case from a couple years ago where a refund was granted and everybody got all excited. The IRS is, exempting gains on or rewards on staking. And they came out quickly and clarified that wasn't the case. They were granting the refund because it was just a de minimis amount. But we even saw that in the Lummis proposal to defer income on rewards until the tokens are ultimately sold, right? So that would be an interesting one because that the IRS has already issued guidance on, right? So that would actually be a reversal of existing guidance where a lot of these other areas just have been kind of no guidance. So
that would be amazing. As someone who stakes and earns rewards, I would love that. And even being able to spend some of my cryptocurrencies if I want to, maybe on anything under $600, not a taxable event. I mean, that would boost adoption.
And that's why we're like, when we talk about like mass adoption and like mass adoption is not here yet. And look, tax is not the only reason, right? But it's kind of a big one, right? If you're not worried about like, oh, do I have to go report this now? Like it's a big deal. It'll put people at ease and they'll be more willing to use it. So
yeah, absolutely. Something that came to mind, I don't know if you can talk a bit about this, but FASB, these rules were updated to allow companies to add Bitcoin and crypto assets to their Treasury reserve. We're seeing a lot of companies start to do this now. What are your thoughts on that and implications that has on taxes?
Yeah. I mean, if you've got it as your reserve, I mean, there's not a ton, right? If you're just kind of holding it, right? There is a rule. Right now, for corporates, there's a corporate alternative minimum tax, right? And so, that rule factors in certain unrealized gains and losses, right? So, in a theoretical sense, right? If let's say Bitcoin really goes to the moon, right? You buy in now. And, use big numbers, right? You buy 1 million Bitcoin at $80,000, but then that 80,000 goes to 1 million. Could be really big numbers, right? Yeah. And so in a theoretical sense, you could have taxpayers that have these massive unrealized gains, even though they haven't monetized it.
Right.
And under the current rules, that could fall under the corporate alternative minimum tax and create a really strange response. And I think actually there have been one or two taxpayers that have been really bullish on Bitcoin for a while.
Wow.
That
they had those gains.
Could potentially be, yeah.
Wow.
So that's one of the things that we're just kind of, thinking about and talking about, right? Just as we kind of go through this educational process, right? And leading up to the 180-day.
Oh, for sure. And what a process. I can't imagine having to navigate this, especially because we don't have the clear rules on the road from the government itself. It's in the process, of course, but at least the good thing is that we are in a favorable environment, so we don't have to worry about getting...
Yeah.
But the companies and the institutions you're working with, are there any concerns on their end, or are they feeling much better, more comfortable now, and they're just waiting for the government to do something?
Yeah, I think there's a lot of optimism throughout, right? I think there's a lot. We're seeing a lot more, especially in the TradFi space, really kind of moving forward, right? A couple years ago, there was a little bit of excitement, and you had some first movers, right? And others that were like kind of creeping along. But I do feel like there's kind of a different, people feel different about it this time. I am sensing that across the industry. But again, we've learned the lessons from past events, right? So especially like a lot of the custodians and exchanges, very, focused on KYC, AML type stuff, right? And the tax reporting is also part of that, right? Because you have kind of your own tax KYC process as part of the broker reporting. So I think there is a significant amount of focus on really doing this right this time. And even a lot of the digital natives, not just for their own customer base, but I think what you're going to be seeing is a lot of these TradFis, right? They want to get to market ASAP, right? So are they really, at least for right now, are they going to spend the time building out their own custodial solution? Are they going to leverage an existing custodian? I think like what we're seeing in the conversations we're having are leaning a lot more towards like utilizing a third-party custodian for a little bit, right? And just kind of white labeling that. And, it's kind of a good strategy, right? If you're one of these, because that way you're kind of still saying, well, if for some reason something happens and this doesn't work out, I haven't invested however many millions or billions in building out my own solutions. So, but yeah, just kind of anchoring back, just a lot more optimism in this go around.
Question for you, regards to the exchanges that you work with, and I know you can't give names, but these exchanges, and I'll give an example, Coinbase, and some other exchanges as well, they offer like tax reporting for their individual users. They spit out a report. I don't know how accurate it is. Are you working with them to set up that type of interface for retail, or you're just mainly on the business institutional side?
So we have talked to some exchanges about setting up a retail, kind of like a referral. So if you're a customer for a centralized exchange, like if you enter a certain program, you'll have access to EY as your tax compliance provider. That is something we are talking about because customer experiences can be very important. And I know Coinbase does offer that right now for a specific client base. And I think you need to have, I think it's certain criteria you have to meet. It's for certain transactional volume. And I think it's your Coinbase activity. I'm not 100% sure on all of that, but it's, and that's where, again, we're kind of looking at a different section of the market, right? You've got, at least for right now, right? You've got a lot of people, even myself, right? I'm not a high volume, high complexity. I've got a couple of things. I got enough to make it interesting, right? But it's, I'm not actively
trading every day.
No. And so, as EY, I'm not interested in the MEs. I'm interested in, the high volume, high complexity. And so that's kind of a very different component of the ecosystem. And so, it's almost like I feel like a lot of the reporting solutions today are going for that lower volume, lower complexity. We're really targeting the high volume and high complexity. So, if, for example, like if you're part of like a VIP platform for one of these centralized exchanges, that's the market we're targeting. Not necessarily. We'll get there, right? We'll get, like you said, we're building this out. We're building it out as a managed service, and it's geared towards that higher complexity. We'd like to get to a point where we're at the SaaS level and we've got customer interface, and I think that's at a different stage of maturity, right?
Oh, yeah. And especially once we get clarity from the government itself.
Yeah.
Because individuals, I know institutions, for the most part, there's a bit more clarity because they have an existing infrastructure and framework versus individuals. It might be a bit different based on income levels and all kinds of stuff. I'm curious, with the repeal of SOB 121 and this favorable environment, are you seeing demand from banks, and I'm talking the big banks.
Yes. That was a major barrier for a lot of the banks, and so we are actively involved in discussions with a lot of the the major GSIPs. They are wanting to offer various types of products to their customer base, and I think to start right, a lot of it's going to be basic custodying, basic buys and sells, right? You're seeing ETFs. You might see, a lot of those ETFs were kind of focused just on Bitcoin or just on Ethereum. I think you probably might start seeing some more kind of diversified multi-coin type of operations. But yeah, the banks are excited, and because they are. Again, it's kind of this general sentiment. I think we're hearing a lot of whispers around this capital gains exemption altogether for made in America coins. All I've heard is whispers on that.
Right.
Nothing substantive. So don't quote me. But I think there's some enthusiasm around that potentially being in this bill as well. And if that happens, I mean, you're gonna see a huge ramp up, right? And so it's I think the banks and the the digital everybody's kind of preparing for this.
The Made in America aspect is so fascinating because there's this larger theme of we want to bring jobs back to the United States. We want to have manufacturing and all that. Well, if you have projects that are homegrown and they give the tax benefits, that could be really huge for a lot of them.
Yeah.
What are your thoughts on the Bitcoin reserve and digital stockpile? There's, the government, I just had Bo Hines, who works with David Sachs on the podcast, and they're looking for revenue neutral ways to gain capital to buy Bitcoin and these assets. So it's not a burden on taxpayers. What are your thoughts on this and what that could do for this asset class?
Yeah. I mean, that's not a whole lot from a tax perspective per se, but just it'll be interesting to see what they do to potentially raise that revenue, right? Because a lot of times, right, and just speaking outside of the digital asset realm, right, there's a lot of other kind of general tax extenders that are up for renewal this year that were just, kind of like, mechanisms around income earned offshore and just certain credits and amortization of certain expenses. And so there's a lot of other things just outside of the treatment of digital assets that they could potentially, levers that they could pull, provisions they could extend or not extend that could contribute to partially to funding this, right? And that's so it's so as much excitement as enthusiasm as I see within the digital asset space and seeing guidance around that, there's also a lot going on in kind of the broader corporate and individual income tax space.
I'm just fascinated by that to see what ends up happening and if they're able to do it, and because the implications it would have. If the United States does it, other countries are going to FOMO and game theory is going to play out, right?
Yep. Yeah. And I would say that up until recently, the UN, I mean, a lot of digital natives were looking outside, right? Because not just from a tax perspective, but from a regulatory perspective and being able to offer certain products and services just wasn't feasible in the US, right? So it's kind of interesting because it's almost like the US catching up, but then going an extra mile, right? Like if they do implement this capital gains exemption, I mean, that's going to be massive, right? That's going to put us ahead of the curve, right? And so, yeah, it's going to be interesting to see just how far they want to go. I think at a minimum, we're going to catch up, right? And that's almost like a requirement, but further beyond that, I mean, that just kind of remains to be seen.
So speaking of the global, movement towards crypto and adoption, do you guys service clients globally or from a crypto perspective? And I know the tax laws are different. Like EU, they release their MiCA regulation.
Yeah.
So are you working with folks around the globe?
Yeah. And obviously income taxes exist almost everywhere. But on top of that, right, we've got the US broker regs, but you also have the Crypto Asset Reporting Framework, or CARF, that exists, that the OECD released. You've got DAC 8 that the EU released, and these are all reporting regimes that are required of institutions to report on customer activity. Now, it's not exactly the same reporting requirements, but it's in the same realm. So you've got these centralized exchanges that clearly fall into all of these reporting rules. Now, the US is kind of the first, right? So that's the US reporting rules for custodians are already effective as of January 1, 2025. So that first reporting will be in early 26. Some of these other regimes aren't effective until 2026, so there'll be future reporting. But yeah, I mean, to be able to serve the digital native ecosystem, you have to be able to function as a global organization, because that's what these organizations are dealing with. They've got footprints in almost every country, right? So, and with that comes the reporting obligations.
I don't envy your job and what you guys have to do there.
Yeah.
And with regards to, we were talking earlier about, different transactions, different type of crypto assets. One of the things, I'm not sure if we have clarity yet, but airdrops, and do institutions participate in airdrops, and how do they handle that
They do, yeah, and there was very limited guidance that that the IRS released a couple years ago that addressed a very finite fact pattern, a very limited fact pattern where you had a hard fork followed by an airdrop. I mean, generally we've been seeing airdrops treated as taxable events. The most difficult part is figuring out what the fair market value actually is, right? Because, again, when are you exactly receiving those tokens? Is there an established market value even for that yet, right? So you have there are a lot of firms out, valuation firms that specialize in crypto valuation that assist. I mean, they can assist institutions and obviously the high volume traders and stuff like that. But where you're stuck with is the individual, right? Like me, I just receive an airdrop and in some cases you might not even know you have it, right? So it creates challenges there, right? And so it's something that I feel like a lot of institutions, especially in the digital natives, they're addressing it. They're able to address it for purposes of their own activity, but it's a challenge at the individual customer level for sure.
Yeah, because I've gotten airdrops for tokens. I don't even know where the hell they came from.
Right.
And I'm like, what is this? But some of it doesn't have a market value. It's not even the token is trading or has liquidity or anything.
Yeah.
It's just like cat token or something.
Yeah. And I mean, look, in instances where you're liquidating that within the same taxable year, it becomes a little bit easier because you still technically could have a character issue, because when you receive income, that could be taxed as ordinary at higher tax rates, whereas capital gains and losses are taxed at potentially lower rates. But if you're an individual and you're liquidating the token in a short period of time, you're subject to short-term capital gains, which is basically you're taxed almost at the exact same rate. In many cases, you are taxed at the exact same rate as your ordinary income. So if you're liquidating tokens that you receive on an airdrop within the same period, it's kind of like a zero, because your proceeds are your proceeds, and as an airdrop, so you likely have zero basis. So your proceeds are your income. So but if if you don't even know you have these tokens, or you're in it for the long play, then it becomes difficult. Do you really know how to report on this? Is the information even available to you?
Yeah, because I've had wallets that I've had from years ago, digital wallets, self-hosted. I log in maybe once per year. I'm like, what the hell is this? I get these airdrops, random airdrops, because I was holding some native token or whatever, and it's like, oh my god, I don't even know what to do with this.
Yeah,
it's just in there.
Yeah, yeah, it's tough. It's tough. It's yeah, and so what we do a lot of times, just with or when we're advising our clients, because they have their customers coming to them, it's just making sure you're advising them to seek the guidance of a qualified tax professional, right? And that's always, again, this goes back to the theme and ethos that EY is focused on, which at least the tax is on tax compliance and enabling tax compliance, right? And trying to really, create these solutions that allow for an efficient and economic way to report your income tax activity without it being like a huge burden for you. But it's tough because you have a lot of clients that have tax preparers that they've been working with for years, right? And they don't have those capabilities, right? So, and that's where we're trying to going back to what you were saying with kind of on the retail facing side, we're not necessarily trying to do every individual's return. We might just try doing the crypto component of their tax return, right? Because they've got someone that they already feel comfortable with. So it's really establishing that solution that enables the broader income tax reporting.
Yeah, I mean, I can attest to my accountant, very smart guy, but when it comes to he's like, I don't know what the hell this is.
Yeah.
And he's having trouble as well. So I kind of have to handhold him on that front because it's so complex. What do you guys have on your roadmap? I know you kind of touched on some of it, but what can we anticipate this year?
Yeah. I mean, so, we are, from an information reporting perspective, we've got we're assisting the custodians, right? And we can do that in a number of ways. We have tools that can kind of piecemeal into their processes. We also have an end-to-end reporting that we can just kind of run the 1099 process from the moment that you're collecting customer tax forms to the time you issue the 1099s, right? So the information reporting is a major focus for us. But on the income tax reporting side, it's really preparing for that expanded adoption, one-day mass adoption, right? On kind of the individual side, on the fund side, on the TradFi side, and just being ready for that demand when crypto and digital assets truly go mainstream. And we've built this product out in the U.S., but obviously this is a global issue. And, the nice thing is the way that we've built our product, it's very agile. We've had to because of the uncertainty in the rules, right? So, we have this inherent flexibility if a client has an established method or established position. And we think that's going to help us out significantly when we look to expand this globally, because each country's, you said this earlier, each country has their own individual rules, right? So can we pull this lever, to treat this as capital in this country and ordinary in this country? And so that's what we're working on right now, is really just not just scaling this for the US, but really scaling this on a global.
Yeah, because globally, we're just seeing so many institutions and the government's putting in the frameworks. It's interesting to watch it play out. I got into the market in 2016, so I couldn't fathom this happening.
Yeah.
Biggest institutions in the world, stock exchanges, banks, all getting involved.
I know. Hopefully you held on to a fair number of your tokens in 2016, because
I did, thankfully, yeah.
Good for you.
And I kind of learned the cycles, the 4-year cycles, and how to play them. So, Bitcoin this morning, like 94K, it's starting to dig its way out of the hole after the whole tariff stuff. So it's really great.
Yeah.
I got some wrap-up questions here for you.
Okay.
First, if you could create your own metaverse, what would the theme be?
Oof. I mean, so I know this kind of already exists or at least was in development, but I'm a huge live music person, right? And so I love the idea of being able to attend like concerts that are not just happening real time, that might be happening in another part of the world, but also concerts that were, happened, I would have loved to be at the original Woodstock, right?
Oh, yeah.
And have that experience where you really feel like you're there, right? So, I mean, I know that would just be a part. I mean, that would be the fun part, right? There would be a more altruistic vision in my broader metaverse. But for me, like that was like, when I heard about that, I was like, this is amazing. Like just the idea of having all of the, the sensory experience of being at that. So if I really had all the time I would kind of really focus in that area.
I'm with you because I love concerts and live music as well. So
yeah,
that would be one of my top things to do in the metaverse. Rapid fire questions. Favorite food?
Anything with seafood and pasta, basically.
Favorite musician or band?
Can I give you like 3 or 5?
Sure.
The Who, the Beach Boys, LCD Sound System, Flaming Lips, Fleet Foxes. There's
Me and my daughter were rocking out to Baba
O'Reilly.
Yeah,
it's my favorite song of all time.
Because I play guitars. I was playing it, and there's a live version that she likes to watch because the guitarist is like
he's doing the windmill, right? Yeah.
So,
that's my favorite song ever. Nice.
Favorite movie?
Eternal Sunshine of the Spotless Mind.
Favorite book?
Sun Also Rises.
And when you're not working at EY, what are you doing for fun?
I'm training for a half marathon, but it's my first one, so I'm not a runner. I'm just pretending to be one for a couple months. Live music. Love it. I've got a 6-year-old sheepadoodle, so taking him out for runs and all this stuff, and my wife and I love just hanging out with him, and that's really it. It's between work and concerts and family and friends. I mean, that's it.
That's awesome. Tom,
Yeah.
Pleasure. And
Yeah.
really excited to see the future updates around EY and crypto and taxes and all that jazz, even though taxes, not a big fan of taxes, but
I know. We're trying to make it, manageable. So
for sure. But absolute pleasure. I'd love to have you back on.
yeah, thanks so much. I like I said, we'll probably be seeing things in July, right? So yeah.
Probably have you back on to interpret some of that.
Yeah, happy to.
Good stuff.
All right.